Hello? Hello? Testing, testing. Hey, there you are. Where you been, huh? How you doing? Morning, Forex world. It's another day. Is it raining pips? I hope so. So let's get started. It's a Tuesday. That means there's an opportunity to trade. Let's talk about it, huh? Sorry, I'm pouring coffee and getting out my granola bars and 10,000 things going on. I see you. There are my pips. There they are. All right. Hey, good morning. Welcome to Forex.Today. I love Forex. How about you? Hey, the thing about trading, where's my mouse? 18 screens. I can never find my mouse. There, I think there it is. All right. Sorry. All right. Trading's risky, not appropriate for everyone. You could lose the money in your account. It's not that difficult, in fact. Your past performance is not necessarily indicative of future results, but you can always stay small and stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader. Been sitting at this chair now for well over a decade trading currencies. How cool is that? Used to be a venture capitalist. Before that, used to be a successful entrepreneur. Now I love trading currencies. I love global macroeconomics. To me, it's a big, giant puzzle, and it's a money game. How cool is that? It's pretty neat. So anyways, we use this time. It's approximately London lunch, 7:30 in the morning, New York time. It's a good time to get together as a community of traders here at Forex.Today so that we can align our satellites. We're about halfway through the day. We're here at Forex.Today Monday through Thursday, and then we're at FX Street Friday. Every Friday. Cool, huh? So today we can talk about technicals, we can talk about fundamentals, we can throw down some trades, review some trade plans, all that good stuff. You're the boss, I am just a humble currency trader. Every day that you lead the way. If you have questions, we tackle them. Sometimes it's like, Wayne, tell me everything you know about global macroeconomics. Fine. Other days it's like, Wayne, how do you trade an oscillator? Fine. We can, whatever you need, my friend, I'm here for you, okay? So go to Forex.Today, register, and you'll be able to attend our events. This one's live. And then, if I go back, once we're done, it takes a few hours because I got to download the video, and then I got to upload the video to YouTube and all that kind of stuff. So you can, at Forex.Today, the archives are at the top and on the side. Feel free to join us. And of course, if you register, you can actually use the community chat. Chit chat with some of your fellow traders. So, un momento, por favor. One of the things I was doing was, all right, bringing up the website. Okay, so here we are at Forex.Today. Hopefully you can see that. Let me suck down some coffee. Good stuff. All right. Which one did I want to cover today? Oh, YJ's trade. Let's go through YJ's trade plan. YJ, are you around? Yup. Wasn't sure if you're out smoking a cigarette, doing Tai Chi. All right, so this is YJ's trade plan from yesterday. He's really good at spotting double bottoms at support. Look at that 200 EMA. Isn't that beautiful? So remember, if the support holds, then what should happen? Should be a higher high, right? So this is what he was waiting for, and he got it. So then what do you do? And just like he says, you know what? If we come back and retest, we could be in an interesting little buy zone. Cool. Some may even want it to go higher and come back down like he does here. So pretty interesting. So that's yesterday. And but this is today's post, right? So anyways, so he updates it, and look where we are. A pullback. Pretty nice, huh? One of the things I eyeball in situations like this is where the psych level is. It kind of bothers me though. You know, the 80 is lower than 786, but that's just that. So anyway, so he says on this 4 hour, hey man, this could be an interesting area to buy. So there's 35, right? So that's his 618. So then you drop into a 15-minute chart, just potentially rolling over. So you can see this is about 40, right? So that's right here on this 618. So it rolls over, maybe heads up, comes down, and goes. Beautifully put together trade plan, YJ. Thank you. It takes time to do this, guys. Right? So Kenny says, well, you know, has an opposite trade plan on the euro yen. This is where you should leave a comment, Kenny, and discuss it. Even just for yourself. YJ doesn't have to respond to it. Just for yourself, you should just document it. Yeah, maybe he will respond. Because I think if you leave a comment, the analyst, in this case YJ, will be updated via email. So I think that's a beautiful trade plan. Did it work out? So here it is at 40. And it went as high as almost 80. So he got you the first 25 pips or so. Right? Here it is rolling over for him. So here's the bad news, right? That's where the bears are going to set up. So this is going to be like fib wars. Okay, there's the 50% to 618, which is perfect for a bear, right? So if you're a bull, I hope you get in on this soon because it ends up being fib wars. Right? This is why entries are so important, because if you entered late, you either just got knocked out or you're going to get slaughtered. If your entries are good, so like his trade plan was around 40, which is our current 786. So if your entry is down here, let's say, like, okay, maybe after this drop, or I think his trade plan was even down in here. So if you're in around here, let's say this 40 area, you're not sweating bullets. You might be worried about getting knocked out of break even, but you're pretty comfortable with the trade plan. It made a higher high on this smaller time frame, so it's going to make a higher low, and it should make a higher high again, at least up into this area, right? So it's just progressing. Okay. Yeah, if you missed the session yesterday, oops, where we covered the commitment of traders report, it's on the homepage, right there. How to plan for the trading week. And by the way, if you want to see every video that I've done, there it is. There's the page. How cool is that? Lovely, tell your mum. Cool. So you put it all in place. I shared a couple links with someone yesterday. Do you want some reading, extracurricular reading? You should read that. And you should read that. Ronnie's going to short the Kiwi yet. I love it. Late, dude. Though, yeah. If you're going to do that, because one way that you should look at this is, you should mark the. Let's see. You should mark the. Come on. That's. Hang on. Okay. You should mark the fact that it's made a higher high. And if you're going to short it, you need to short it as high as possible if you believe that we have the fib the other way, which is perfectly, absolutely, totally valid. Okay. You could think this, and there's nothing wrong with it. All right. The thing is, I guess I had it like this. There we go. The thing is, it just made a triple bottom higher high, right? So if you're looking to sell this pair, you got to sell it as high as possible, or truly wait for a pretty big reversal pattern. But a triple bottom at a macro 618, as YJ pointed out, could be pretty bullish. And that's not really a scenario that I want you to trade in as a bear. Okay, this is what some bulls have set up. Okay, but like I said, shorting Kiwi, well, if global macroeconomics are bad and commodity currencies are being punished, fine. If some of the leverage is being taken off out of the world, then the yen should get strong. Fine. But you still want to do it in the context of a downtrend, not an uptrend. Right? Because remember what I keep saying, form a bias, I don't care what it is or how it is, fine. Just tell me what your opinion is, right? And if you're a bear on this, fine, awesome. But you need to wait for a bearish market. Okay? That's all. And, it's not a great place to be now as a bear. Yeah. All right, short since yesterday. Well, at what point do you take a profit? Right. But so where are you short then? And what puts you in? Are you short sort of up in here? Oh, he's checking that out. These guys switch computers. So if you're short there, that's fine. Oh, 80.75. Yeah, okay, that's fine. Where though? At what point? I guess it comes down to. Yeah, that's fine. A break and a retest. But see, it all depends on the context, right? Just trying to see where you might have pulled that trigger. But and then it comes down into here, which is fine. Is there? There's a daily pivot in there. Good. Cool. Well, then you're looking at it this way. Okay. So in that case, I hope it works out, right? And it's all part of the fib wars. Like I said, you know, for a bull, they're entering here. So you want to be long, like off of this area, or as YJ said, on this area, which is fine. And if you're a bear, yeah, being short up there is better than being short here, right? So up in there, huh? Just wondering. See, it all comes down to where you entered. Like, if you entered here at 75, that would not have been a very good trade. And see, a bull would have bought here, right, on the retest. So to have it come crashing down like that for a bull is very unfortunate. So, but where do you short? And there's a little nano in here before the drop, but I don't know if in that context I would want to do that. So it's just very interesting. Hope it works out, man. But I want YJ to make money too. Fib wars, man. That's the problem with fib wars. Is what's happening is you just lack a strong conviction trend. You know, for lack of a better word, nothing's going on, right? So someone's buying the higher lows, and someone else is selling the lower highs, and everyone else in the middle gets just slaughtered, right? You know what I mean? So as long as you're, you know, so Ron is way up high up here, which is fine. But you'd be surprised how many traders will be in the middle of that, and that's where you lose no matter what you're doing. But selling high up here, that's fine, right? There's, and I'm buying it in here, that's fine, right? I think we can agree that, that's a reasonable sideways move. So if you're going to buy it low. If you're going to sell it high, and everything in the middle, like now, is not good, right? So I think the battle then for YJ and for Ron is what happens at this midpoint psych level, this 80.50. Okay. And because then we find out who's actually in control in the moment. Is it the bulls or is it the bears? And if it does this now off of 50, I would probably want Ron to take his profit. Hey, good morning, Nuno. Yeah, James asks a good question. What would the fundamentals be behind a strengthening yen? Well, does anyone think that the Japanese will suddenly just stop quantitative easing, or maybe tomorrow announce that they're going to taper? No. So usually what happens now is a risk-off moment. Right? If people just want out of their leveraged positions, what are they leveraging? So I've done so again, you have okay, this is a supply curve of domestic currency, and this is a supply curve of from foreigners for the local currency. And let's say you have a world rate of interest. Okay, and let's say the Japanese interest rate is lower than the world rate. What does the rest of the world do? In this case, right? In this case, foreigners are coming in and borrowing this money and then investing that money in other assets globally. And that weakens the Japanese yen. Okay? Now, if the world rate was higher, like let's say Australia decides to raise interest rates. It's important kind of in the context of the trend too. Australia wants to raise interest rates to 2.5%. Australia's interest rate would be higher than the world rate. And money, if this supply and demand for their foreign currency, if this was for theirs, then money would go into Australia, and this would be money coming into Australia. In this case, this is money coming out of Japan. Why? Because it's the cheapest money in the world. It's cheaper than the average. Right? So you can buy it for cheap with your currency. So if you're Australian, Japanese currency is cheap to you because an Aussie dollar buys a lot of Japanese yen. Okay? So in any case, so the world is using this money out of Japan because the Japanese rate is lower than the world rate, so they use it to fund things. So they borrow it because it's cheap, and then they use it to buy higher yielding assets because they do have to pay for this loan. And maybe they buy a skyscraper in London or something, right? So in that case, the fundamentals are not going to change. The interest rates are not going to change. They don't change that quickly. Quantitative easing in Japan's not going to change, all that kind of stuff. But what if investors simply want to pay back this loan emotionally? Not because of a change in the supply-demand curve. It's just, how about just fear? It doesn't have to be rational. That's what happens from time to time in the market. And in that situation, they pay back that loan that they borrowed. What happens when the people that borrowed that cheap money, what happens when they pay it back? So remember, when they borrowed it for cheap and then they went and bought something that higher yielding assets somewhere out in the world, they end up taking what they own currently. They own the Japanese yen. They want to sell it so that they can buy something that should appreciate in value or provide some sort of yield, right? So they're in the marketplace. They've sold their yen. The supply of yen globally goes up. the value of the Japanese yen goes down, right? So the opposite of suddenly a lot of people get out of these trades, they need to pay back their loans, but they owe Japan yen. So they have to then sell whatever they bought, right? And then buy back that yen and pay back their loan and get out of the trade. So suddenly the market for the Japanese yen is strong. Did anything fundamentally change? Did interest rates change? Are interest rates expected to change? Is there a change in monetary policy? No, 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 no. So what changed? The demand for Japanese yen. Now, it's probably not going to be long term, but that's what happens. That's why the yen could suddenly get strong. Okay? So here's a similar trade plan that I did a few days ago. Didn't kick off the role reversal, but look where it did kick off. Lovely. Look at the oscillator. Beautiful setup. Yeah, so if you're in at 40, like YJ said, you're feeling pretty good about it. If you're way up here, like Ron, you're feeling pretty good about it. Both are correct. Both are good trades. Ron says we both win. Well, it's entirely possible. If you both took profit here at 60, you'd both have money. Yeah, but most likely, I think you should both have your risk removed because I don't know what's going to happen here. Like I said, only amateurs trade in this area. We're in the middle of fib wars, right? If you want to lose money, you place a trade now. And I don't know who's going to beat you up, the Bulls or the Bears, because it's undecided, it's undetermined. There's no, you don't have any edge. You see what I mean? Like there's no alpha. What does that mean? You haven't beaten the market. You're in the middle of the market. You're not at support. You're not at resistance. You're confused, right? So like I said, if you are a bear, you need to sell it at resistance, right? Cool. If you're a bull, you need to buy it at support, right? Look at all these areas of support. Cool, man. So you should, right? You should be as low as possible or high as possible. What happens here? I don't know. Tell me tomorrow. Couldn't tell you. Now, I want this to go up, but it doesn't mean it will. Well, again, guys, it's not like one has the advantage of the other. It comes down to your entry. If YJ's long, let's say his actual trading account, he's long up here, it's not a good trade. If he's down here, it's a very good trade. And the pips are hardly anything, but I don't care about pips in that sense. It's, where do we have it here? Okay, it's like on this chart. So I had a very similar plan that I laid out for you guys. Okay, so if you looked at the higher high, oops, okay, if you looked at the higher high in this area, and you're a bull, you want it to come down. Cool. And you're eyeballing previous support. You're eyeballing the 618 because we know that's a 618, and you're eyeballing the oscillator. There's lots and lots and lots of opportunities to be long here, close to the support. So I don't really care pip wise. It's just you need, the closer you are to the support, the better. Because you end up risking less, right? Because if this fails, and you're probably thinking coming down to here, and then you want to start kind of looking at bounces here, just like it did here, right? So you just can't be late, is all I'm saying. And selling up high, okay, that's fine. Now, for me, and I mentioned this earlier, I like psych levels and stuff. So I was, I would like to be along this closer to obviously a central pivot, but also right in here, this lower area, that's the psychological level, right? But we've already had that. And then, of course, if you're going to be short, you might as well be short at 81. So 75 isn't traditionally a good place to be short. Okay, in a downtrend, okay, when you have something like this, all right, anywhere between 0 and 20. That's where I like to be short. So somewhere between 0, which is the psych level, and 20. Okay? And that's fairly easy if you have a very strong trend downward, let's say in this case, because it probably dropped to 80 first, didn't it? Now you're short 75. Okay, but anyways, let's say it drops to 80. Then it should retrace back up to the 0020 area, and that's where I want to be short. Somewhere in there, doesn't matter to me, and then back on down. Okay? That's a fairly easy trade because you saw the lower low through the psych level. Now, it might be 85, it might only be 90, and if it's only 90, it's probably going to go to 20. If it's 80, it's probably only going to go to 00. But nonetheless, I'm waiting to drop it like it's hot. That's a typical like bearish move for me. When I look at this chart, I don't really see that. To me, it seems like it's going up to 80, not down through 80 and then retest, right? So I don't have this prevailing trend behind it, and that bothers me as a bear. Boop. Okay. Trying to see if there's an example now. Where's it? Where's 80? Well, let me draw something here. Let's see if we can get lucky and have an example. So this is 80. Oh, come on. This is 82. Okay, there's a great example maybe. Oh. Okay, there's the psych level. Okay. So if I was a bear, what I was just showing you is like that is where I'd want to sell. The retest. Oops, come on, drawing tool. Okay, the retest. Okay, let's do another example. 81. Okay, it's here. Okay, you see this? Drops down, retests. That's where I want to sell. Right there. Okay. It kind of now, up in this area, it still kind of feels like a double bottom, which is with a higher high, which to me is a reversal pattern. And it makes me nervous. If I was a bear, I'd be nervous about that. Okay. Because I know if I was a bull, I would find this irresistible, right? Yeah, let her cook. That's why, you put your stop at break even and you find another trade, right? It's not like you married this trade. You're like the old woman that lives in the shoe. She has so many pips, she doesn't know what to do. Just like, well, really? Didn't even notice that kid was hit by a car. Oh, well. Luckily, I have a lot of them. All right. It was a horrible joke. Right. But you don't marry your trade. Have you ever found yourself staring at a losing trade? Like for hours? You know what's interesting about situations like that? Not only are you losing money, but you're missing a lot of trades that should be making you money. But you're not doing anything. You're just staring at the loser. You see what I mean? But you're staring at it losing money, so you're losing money, but you're also ignoring all the good setups that you should be taking. So that's why very often I find some good trading is when you set up a good trade, you really like it, you like everything about it, right? You take the double bottom higher high off support, good, you enter the trade. After a certain amount of time, you move your stop to break even, and then you go find another trade and you just completely forget about the other one. Just completely forget about it. Oh, are you still on that trade? Oh my gosh, woo, nice. Right? You say, oh yeah, that's right, that was a good one. All right, ool. Here's our ool. I suggest you keep eyeballing ool. We said yesterday that it could possibly find a top. Closer you get to 50, the more you want to sell it. The closer you get to 40, the more you want to buy it. And in this case, 42. We're at 45. I think yesterday we tested the 44, didn't we? And that was our current support. Oh, look at that. Cool. I remember this yesterday. I hope you do too. Yesterday we were well, it had to been about here yesterday. And I said, look at how wonderful this trades. So it comes down to support. This, right? You take this low. It breaks lower to here. So you identify this previous low, and that's your new sell zone. Price comes up, green. This is where you sell now. Boom! Makes a new lower low. Take the old support, drag it across. That's where you're going to sell in the future, right here. Boom! That's where we were yesterday. So I drew this for you. I dragged it across, and I said, that's where you're going to sell in the future. And look what happened. Boom! Holy smokes. Luftletelumum. And the theory is you'd keep doing this until it stops working. Now, here's the interesting part. 21 was in control. 21 is in control. 21 is control. 55 is in control. Uh-oh, what's the difference? Oh, and Jimmy took that one. Right on. Less bears. That's the only difference, guys. There's less bears. Okay. So if I drew a MACD, there'd be, a little bit of divergence, I think, setting up here. But to me, it's bearish but conservative. That's all. Conservatively bearish. These first trades, you're aggressively bearish. You're selling off the 21. Here, you're conservatively bearish. And I think at some point, of course, we came down to our 44, and we know 44 is support. So as we got closer to 44, more and more bears took their profit. Does that make sense? Because people know it's coming up, so they get worried about it. Okay. So we'll see. The potential here is 43 at the moment. But we were to watch Canadian dollar, right? Cool. Oh man, is this falling again? Oh, look at that. 300 pips exactly. Woohoo! Nice. As you can see, I moved my profit order because that'd be too embarrassing to only get 300. Cool. See? Let her run. Let her run. You're targeting 450 pips? Yeah, I don't target pips. Now, beautiful little trend here, huh? Very nice. This is very similar to the pattern I just spoke about. Through the psych level, retest the psych level, and down is the general pattern. Right? You got to have the psych level. What's the psych level? $1,100 an ounce, right? So you wait for the strong trend, you break through the obvious support, you wait for the retracement. In this case, it dropped to 87, 86 or 85. And the pattern I was talking about is a drop to about 80 and then back up into 00 or 20. In this case, it'd be 1100 to 1120. But anyways, we'll see what it does. Currencies, I trust a lot more than physical commodities because they'll trade they trade differently. It is a different beast. So I think that if it falls through 1100, I believe there are powers in the world that will buy it, not because they actually want to own it or because they think it's a good investment. They just want to prop it up. They don't want to test $1,000 an ounce. They just don't. Because if it breaks 1,000, it's dropping to 650. Did you know that? Back in the day, one of the first things I kind of was infamous for, I did a 2.5 hour webinar, and it was the first time I ever made a flat out prediction. This was probably my second year of coaching or third year of coaching, can't remember what it was. And finally, I took a stand. I took an opinion. I felt so strong about it. I'd done so much research, and I was just so convinced of it. So instead of talking about Euro USD 15-minute charts and 5/8 crosses and such, for the first time, I did this big long speech about buying gold at $650. Right? I said, fill your closets full of gold. And then I also said, fill your swimming pool full of crude oil. And I think at the time it was like 40 or it wasn't as high as $65 yet. I mean, and gold went to 2,000 and oil went to 200. It was just amazing. But it took a few years to do it. So I just in the back of my mind, if you tell me it breaks 1,000, I'm thinking 650. Right, Joe. So Joe says, well, then if the Fed raises and that attracts money to the United States because its domestic rate is higher than the world rate, you know, you're going to, so going back to that chart that I did before, okay, you have, remember this, the supply for and the demand for money. But it's actually, these are both supplies. So this is the supply domestically plus, right, the supply of loanable funds by foreigners plus, so that's SD plus SF, right? So the curve is flatter, right, because you got, it's going to increase the quantity. So you have the supply of money domestically, right? And then foreigners could come in and also lend money to Americans, right? So therefore, you'd get the supply of money in from Americans plus the supply of money from foreigners, which would increase the quantity, and so you got to flatten the slope here. But so this is the equilibrium rate in the world. So let's, right, again, interest rates. But if interest rates are higher domestically than the world, right, you got this part. Right? So more and more money would be invested by foreigners in particular into the US economy because its rate, the United States rate, will be in a trend of being higher and getting higher and higher above the world rate. So money would flow into the United States for not just normal supply and demand of goods, but a new supply of money for nothing but for financial investment, you know, financial assets, right? Basically bonds. If a foreigner wants to buy the bond market, or actually what they'll probably buy at first is the stock market, right? Foreigners will want to get in on that because of the Fed policy of raising interest rates and all that kind of stuff. So the foreigners will want to buy more U.S. assets, either the bond market or the stock market, whatever they want. That will increase the demand for the currency, and the currency goes up, right? And so if the value of the dollar goes up, and investors, both domestically and foreign investors into the U.S. economy, are making money, let's say, in the stock market, who the hell wants to own gold? And they wouldn't, right? And that's why you get this test of 1,000. But if this trend of, let's say, a skyrocketing S&P 500 and a slow but steady, and this is important in Forex, slow and steady interest rate climb. I mean, what if interest rates go up 1% per year for the next 7 years? What if interest rates are going to go to 7%? Slowly, slowly, slowly. Because for our inflation to kick in, we need foreigners to actually get wealthy so that they can send more of their money to the United States, and so on and so forth, right? But it would be slow versus going from 0 to 7% in 2 years. What, you know, that would suffocate the market. But if it was slow and steady and we could plan on it, okay, all right. So that changes things, right? But the dollar could get strong every year for 7 years. 7 years is a pretty long cycle, but you know, it could happen. I mean, there's no other game in town, right? So I think it'll be very interesting. It could, I don't think it'll take 7 years, but it could take 4 or 5 years to get the rest of the world in the same shape as the United States is now. Would anybody agree with that? The slow, slow, slow growth. It could be another 4 or 5 years, easy, just to get Europe back online to near full employment. Now, we don't have inflation yet because there's no wage growth, there's no increases in income. We're just starting to get consumer confidence again. We've stabilized the real estate market, but so now we need 5 years of being in a job, having a secure job, having getting a second job. Now imagine, and this is what I mean by this, imagine during the financial crisis you went 2 or 3 years without a job. We know it happened. Okay? Then finally you get hired. How do you feel? Do you feel confident? You have a good job. You make a decent salary. Maybe it's just as much as you made 10 years ago, but you know, you can live on it, right? But are you confident? Are you going out making big purchases and buying real estate and going on cruises around the world? And I think you're still pretty shaky financially and even emotionally, right? So what if 4 years later you got this decent, good job now, and the company's doing well, you like where you are, and they give you a promotion? They're like, you've been here for 4 years, you're doing such a good job, we want to put you on the management team, you're going to get a 20% raise, and now you're feeling good, right? You feel like we're back, the world is back to where it's normal, right? And as far as you're concerned, the world is safe again. So here's the interesting thing. That's your second job is kind of what I have in mind. It pays more and you feel psychologically and emotionally stable. So you're like, now, and you spent 4 years paying down your debt. And now you're staring at that 65-inch OLED, right? TV with the beautiful curve. And you're like, wow, man, it's only $2,600 for this curved 4K OLED TV, the 3D glasses. And you're like, man, that's what I want. And when we get to that point, guys, the world is in good shape. If that's happening now in America, everyone that wants a job in America, assuming they have reasonable skills, has a job. We're at near full employment. So the next thing, if company A wants to hire more employees because they're getting new orders, where are they going to get employees if we're at full employment. You understand that? Like, we're near 5%, right? We're 5% or even breaking that. We're at full employment in the United States. We were at 10%. Now there's only 5% unemployment. So where do you get them, though? Well, why they're not participating is a tougher question, James, right? But if you want, you got to offer them a better salary, or bring your dog to work day, right? Bring your slimy snot-nosed, rug rat to work day, and you could telecommute on Fridays, which basically is take half a Friday off and go golfing day. All this kind of stuff, but it comes down to, usually it's a higher salary, right? So we're 5 years ahead of Europe. And when Europe is in that situation where Europe is back near full employment, and there's a feeling of long-term security, and which means you had your job for a while, maybe you've got a better job because someone else is going to pay you more money, either through a promotion or a better job, and now your income to debt ratio is much better, much more favorable, and you feel confident, and you go out and you make that big frivolous purchase, which keeps factories going in China and Korea and Japan, and then they need to buy natural resources, which keeps Canada and the United States and Brazil and Russia, keeps them going, and then so on and so forth, and we have a wonderful cycle. Now they have too much money, now they need to buy U.S. debt, and then, trade balance is a problem, and then the United States is doing great, and so on and so forth, right? So we got a whiles yet. But, hey, if that happens, and the world gets back to where it was, and history does have past performance doesn't predict future results unless you study history. And past performance almost always predicts future results. We get right back to where we were, and guess what? Gold goes back to $650. Oh yeah, I'll tell you, Lucas. I'll tell you exactly. But that's not this year's conversation. Remember, I told everybody I ever met, I was walking down the street telling people to sell the Euro USD. I'd meet people in the grocery store, sell the Euro USD. We talked about it for 6, probably even 9 months before it happened, probably even longer than that. Right? The first one was the taper. No, actually, I don't believe I'm exaggerating. So, telling people in the street, and that's exaggerating. But at least 9 months we talked about it, that on the day the Fed announced that they were going to taper, that's the day I become bullish on the US dollar. We talked about that so far in advance, like in the spring, but they didn't taper until November. And we talked about it. Why? Because, it's the beginning of less bearishness is the beginning of bullishness, and so on and so forth. And then the next step had to be, Europe doing whatever they needed to do, because they were suffering from terrible deflation because of the overvalued euro. But why was the euro overvalued? Well, the euro was overvalued because the ECB guaranteed bond purchases for Greece, Italy, and Spain. Well, why did they have to do that? Well, because those economies were crashing, and interest rates climbed to 20%. Those economies could not afford to pay the 20%, but the ECB couldn't afford to bail them out. So how did they do it? With an implied wink wink from Draghi, who said he'll do whatever it takes to protect the euro. So therefore, money flowed into Europe, took care of that problem. Investors around the world lent the pigs the money they needed, but at the 20%. But then that inflow of money dropped the interest rates from 20% down to 5% again. But now the euro was overvalued because all that money went there. So what did they do? When those bonds rolled over, right? Interest rates were at 5%. ECB comes in, does some other monetary policy actions like quantitative easing, and they drove all that money back out. I mean, I'm telling you, I talked about that at least a year in advance. I mean, it was so interesting. You should have been there as a currency trader. I'm telling you, it was so fascinating to see, what happens when Italian bonds go to 15%. I mean, it's just, right? You should have been there. It was just so interesting. What does the ECB do when interest rates in Italy go to 15%? And Spain goes to 20%. Partially because those economies were in shambles, but partially also because of fear. So what does a central bank do? It was an interesting question then, and then what happened was interesting, and we talked about it for hours and hours, for days, for weeks, for months, for years, and we were there, and it was very interesting. What does one do? And it came down to one phrase, and we watched it live. That's why you should always be in a live trading room, right? Oh, which I guess I'm doing today, right? Holy smokes. So we got to switch over rooms pretty soon. But anyway, so Draghi, his solution was to talk it. You know what I mean? Verbal intervention. We were there. I saw him say it live. I am prepared to do whatever it takes to support the euro. That changed the world. And money flowed into Europe now because the perceived risk of lending Greece or Italy or Spain money, because remember, interest rates are so high because of fear. Well, what was the fear? The Spain would default and you wouldn't get your money back. So they're like, I don't want to lend Spain money. So what happens? People pull their money out of the bond market. So what happens when you're dumping assets, guys? What happens when you're dumping assets? The price falls. Right? Everyone's like getting out of Spain, getting out of Greece, getting out of Italy, getting out of Portugal as fast as they could. Prices were just plummeting day after day. It was like the end of capitalism as we knew it. It was just plunging. So interest rates go up because now Spain's like, please lend us money. Interest rates are going up 14% one day. The next day it was 15%. Well, if you thought that if you waited one more day you'd get 16%, then prices would fall even farther that day, and it was self-perpetuating. So all of a sudden you're like, oh my gosh, 15, 16, 17. Spain's like, please, we'll pay you anything. Just lend us cash. We need cash. We'll pay you 16%. We'll pay you 17% for 2 years. Just give us the money, please. And no one would do it because they're like, are you crazy? I'm not going to give you money because you're not going to pay me back. Why would I give you money? I don't care if you pay me 1,000%. The risk is too high. And then Draghi said, wink, wink, nudge, nudge, I'll do whatever it takes to support the euro, if you know what I mean, wink, wink, nudge, nudge. Now the risk just plummeted because what Draghi said is if you lent Spain at 17%, you lent them money for a year, if they default, the ECB will bail you out. He never said it. It was implied. Good enough, money just flowed into Portugal, Spain, Italy, even Greece, Ireland. Okay? So what happens now when all that money is flowing into all these countries in the Eurozone? What happens? They're buying the bonds so that they can collect 15% interest, and they feel like they'll be bailed out by the ECB, so it's well worth the risk now, because they're not really investing into Spain, they're investing into the ECB. So you need euro to buy those Spanish bonds. Now you own the bond, it's going to pay you 15%, and you're going to get your money back either from Spain or from the ECB, but you don't even care. So what happens? Everyone wants euro. The euro USD skyrocketed to 140. Okay, what happens to bond prices if everyone is buying up all this paper that pays outrageously high interest rates? What happens to the price if everyone's buying now? Buy, 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 buy. Prices start going up. So does Spain now, if money is just flowing into Spain, do they have to pay 17%? Prices of bonds are just going up and up and up and up. What happens to interest rates? Spain says, shoot, I'll only pay you 14%. They're like, good enough for me, man. 14% is great. I can get zero out of the United States. I'll lend you at 14%. I'm happy. And then the next day, Spain says, well, I'm only going to pay you 12%. And they're like, yeah, 12% is good because that's way higher than the world rate. It's just like that, the charts I've been drawing, right? You see? But so what's the consequence? Well, after a year of this, interest rates in Spain and Italy and Greece and Ireland, and Portugal, they're 5%, they're 4%, they're 3% now. ECB didn't even have to spend any money to do it. All Draghi had to do is say he was willing to do it. Wink, wink, nudge, nudge. Never had to spend a penny. Bailed them all out. Didn't have to spend a penny. But what was the negative consequence of that? The euro. Everybody needed euro to get in on this. I mean, think of it. If you're a hedge fund, and you got $1 billion invested in the Spanish bonds, paying you 15% for 1 year. I mean, holy smokes, really? Just drowning in money, right? Guaranteed money? Wow. So now, all of a sudden, you got the euro USD at 140, and guess what? Deflation. Deflation. So we talked about all of this in real time, guys. So when the United States decided to taper, it was the end of the dollar weakness, because the dollar weakness came from quantitative easing. Yes, they were still doing quantitative easing, but it was the change in central banking policy that would lead to a trend of less and less and less weakening. And in my eyes, that is less and less weakening is more and more strengthening. And then we'd get to zero interest rates, and there'd be, and everyone else is just, and then we expected the ECB to do quantitative easing. I actually said they would do something like quantitative easing, but the Germans wouldn't let them call it quantitative easing. Turns out they just had to change the laws. But one way or the other, they had to do something, because the euro was so overvalued compared to everything else that Europe was stuck in deflation, and a Mercedes cost twice as much as a Honda, or an Acura. I was just at the Acura dealership. I could buy the nicest Acura they have for 55 grand. It's a beautiful car. I'm like, 55 grand? That's like a 5-year-old Mercedes, man. Right? I'm like, that's cheap. Well, one's priced in yen and the other one's priced in euros. Problem when your Mercedes, your entry-level AMG costs you $110,000. $110,000. You know how many Acuras I can buy? Holy smokes! I can have 3 Acuras for that much money, right? I could buy the big, what is it? The big RL. I think I was looking at. I get that RL, and I could throw in the SUV for free for the price of one Mercedes, right? Well, this is a problem for Mercedes if you're trying to sell cars. Let me tell you, that Acura was nice for 55 grand, brand new, drive it right off the showroom floor, fully loaded. big, nice sedan. That was a beautiful car for 55 grand. It's a tough sell when you're looking at that and you're like, well, it kind of looks like the Mercedes for 110. So that was a big problem, guys. So the ECB did what it needed to do to weaken the euro. All of this was so unbelievably obvious that no, I'm not exaggerating, that we talked about it plain as day like I just did now, 9 months in advance. We were actually pointing out the days in which there were meetings to do things like the taper. I watched it live. We knew what to do. All of it. Easy. 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 That's cool, man. That's just macroeconomics. Look at that. I'm actually working on a model right now. Look at that. Boop, 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 boop. That just happened to be what I was doing yesterday afternoon. So it's only macroeconomics, guys. It's just money moving around the world. That's all we do. It's a real problem like that. When you're looking at your top of the line Acura and the Mercedes and they look like the same car, one costs twice as much as the other. Perhaps one is undervalued and the other one is overvalued. It's just macroeconomics. That's all it is. It's just money. I love it. I love what we do, guys. Absolutely love it. Yeah, you'll take the Mercedes. Let me tell you, for about 6 years, I owned an AMG, full AMG. The whole car was made in the AMG factory. It was a convertible. I got an upgraded convertible roof so it would be quiet when I had the top up. It was like a $12,000 upgrade for the ceiling roof, the liner. I mean, stupid expensive car, right? It cost me more than $1 a mile in maintenance. $1 per mile in maintenance for a handmade Mercedes. Ridiculous. In the course of 5 years, I drove it 5,000 miles and spent $5,000 on maintenance. I'm like, what the hell am I doing? So I got rid of it. It's a beautiful car. People are still like, man, you don't have that Mercedes anymore? I'm like, I don't go anywhere. All I do, I have a passion for Forex. Take the stupid car. I don't care. Yeah, take a taxi, whatever. It's just, I don't care. I drive a golf cart. That's how I roll, yo. So, hey, I got to go. I'm opening up the room. I believe it's ready in the back office. Go to TradersWay.com. Open up a demo account or fund a live account. Either way, I believe there's a link in that back office. I'm going to roll over there, and we're going to trade the New York stock market open live together as a team. We did it yesterday. I taught people how to front run the equity open. I guess we'll do that again. Turned out I was wrong, so either we lost some money or we didn't do anything. Depends on what your entry was. That's how it happens sometimes, man. But we'll put that together and all that kind of stuff. And so let me just double check. Hang on a second. And so I'll tell you what, I'm going to end the webinar. Stay in the room. I'll give you an update on if the link is in the back office. And if so, if it's ready, we'll roll over there, okay? That's right, Gene. So, all right. So hang on.